Welcome to January 2026 market update with Quiver McFadden. Quiver Financial. I'm Colby McFadden. I'm joined with Justin Singletary and Patrick Moorhead. Gentlemen, how are you? Welcome. Happy New Year.
Happy New Year.
New Year. No Christmas tree?
Patrick is Japan bond market because you saw that I brought out the Revenge of the Rising Sun. So, gentlemen, why would I start today's event with the Revenge of the Rising Sun? What would be the purpose of that?
Well, we alluded to it in our last video very briefly. Yes. So not to toot our own horn, but we were kind of spot on.
Yeah. We even talked about this in our Catch the Next Wave from almost a year ago about the yen carry trade, which will be a topic matter today. And before we get too deep into that, let's talk about what we're going to talk about now, because it is January 2026. It's the start of a new year. We ended the year in Quiver clients. I hope you're very happy because we ended the year on a very strong note. Most of you got an email from me saying, hey, what happened? I hope you saw it, because now we've started the year on even a stronger note. So it's been a nice little stretch. So what we're going to talk about today is something that has changed since our last event, because in December, when we talked about interest rates, I said, no concerns. Everything seems fine. And then all of a sudden, boom, things have changed, because this week, as of Friday, actually, of last week, we've had a change in the rate regiment, which is ruh-roh, Batman. So we're going to talk about that. Where's the 10-year treasury? What are the levels that matter? Okay. And what do you do in a portfolio? And more importantly, for clients, what are we doing for you within the portfolio? So what's happening in rates? What are the levels that really, really matter? I got to move one thing out of my way. Then we're going to talk about stocks or equities. The Mag 7, if you haven't been paying attention, the Magnificent Seven, the technology sector, has been on this kind of slow grind sideways of correction since October, basically last earnings. So the Mag 7, which was leading the markets, has been lagging the markets. And recently we have a big cause of volatility because of global rates, which is the Revenge of the Rising Sun, because most of this started in Japan with rising rates and currency changes in Japan. And we're going to get into that and how that trickles across markets and affects some of the liquidity. Okay. So is this a correction? Some of the volatility we saw yesterday, is it a correction? Is it a start of the bear market? I'm going to show you the levels that we're watching, because all the levels that delineate bull versus bear are getting really squeezed in time. And so we really want to start to pay attention, not a time to be complacent. We're also going to talk about the best sectors. What sectors of the market ended 2025 strong and are starting 2026 even stronger, so that way we can position properly. Then the US dollar. I know all of you get all the emails about the dollar's worthless. It's going to zero, blah, 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 blah. You should be in gold. You should do this. You should do that. Bullets, butterfingers, build a bomb shelter. I'm going to show you charts about the dollar. It's not as bad as the press or everybody would like to think. And I'm going to talk to you about how to play it, because we're at an inflection point that we got to pay a lot of attention to, that could affect the rally that's happening in metals and other parts of the market. So that brings us to gold and silver, and boy, to the moon, Alice. So we're going to talk about when to preserve profits, because if you've been living under a rock and you didn't know it, gold, silver, gold miners, silver miners, things we've been talking about for a long time, have been going parabolic, and nothing goes in one direction forever. So we're going to talk about the levels we're watching to manage risk, take profits, such and such and such.